Dear ACCA student, I'm Eunice Xu. Nice to greet you here. Today, I would like to do some past paper review of strategic business reporting with you. I wish that will help you. Thank you. I would like to do a past paper review. It is question 1 of September 2018 about goodwill calculation. Let's take a look at the question. Usually, I request my student to look at the required before they start off the question. In this question, it is asking how goodwill should have been calculated on the acquisition of Grape and show the accounting entry which is required to amend the finance director's error. Very clearly, we know that there will be an error, and students need to show the correct calculation of goodwill plus initiating a journal entry to correct the error, and total marks are 8 marks. Now, first of all, on 1st January 2017, Banana acquired 80% of Grape. The equity of Grape, the subsidiary, is like this. Share $1 each, and total number of share capital is 20 million. So we can immediately know that the number of shares in Grape will be 20 million shares. And there will be retained earnings, 42 million, other component of equity, 8 million. So in total, 70 million is the shareholders' fund of Grape. Now, if Banana acquire 80% of Grape, in that case, we understand that the NCI will be 20%. So given NCI holding 20% of the share capital of Grape, how many shares NCI is holding? Since the number of shares is 20 million, so the number of shares NCI holding is 20%, which is 4 million. Now, when holding acquired the subsidiaries, it pays purchase consideration that comprises of 10 million shares of the holding company at nominal value of $1 and market value of 6.8 per share. Now, which number we should use? Of course, we know that we should use the fair value of the shares. So 10 million share, the value will become 68 million. Now, apart from shares, the parent company also pay cash to acquire the subsidiaries. How much cash is paid? 18 million. But be careful, the cash is not paid immediately. It is paid in 2 years' time, in 2019, if the net profit of the subsidiaries grow a certain percentage. So there is a criteria before the cash is paid. Now, what is the percentage of net growth of the net profit doesn't really matter. It shows that this cash may or may not be paid only upon the achievement of the target of subsidiary. So this type of consideration, we call it contingent consideration, CC. Now this time, because the parent company is committed to pay cash, therefore the CC is a liability. In other cases, if the parent company commits to pay equity, then the CC can be equity. Now, because the cash is paid in 2 years' time, therefore we should use the present value of the amount rather than to use the nominal value of 18 million. How much is the present value? The question also already gave to you. It is 16 million, all right, and it is paid in 2 years' time. But as I said, it's no guarantee, and we have to consider the chance that the subsidiary will achieve the target. So the chance in this case is only 25%. Therefore, when we calculate the fair value of the CC, we have to take into account the chances of payment. So the amount or the fair value of the CC should be 60 million times 25%, which is 4 million. All right, so up to here, we can recap the NCI value. The number of shares held by NCI is 4 million shares, and the consideration transfer is 68 million, while the CC fair value is 4 million. The equity of the subsidiary is 70 million. Gone, we see that the land of the subsidiary actually appreciates by 5 million, and this has not been included in the equity. In other words, student has to help to increase the value of the asset of the subsidiary by 5 million. And the group policy is to value NCI at fair value. Now this time, the shares price of the subsidiary on the day of acquisition is 4.25. So what should be the fair value of the NCI? We use the number of shares of NCI times 4.25, will be the fair value of NCI at the day of acquisition, which is 20 million shares times 20% NCI sharing times 4.25. So the fair value of NCI is 17 million. Now, the director calculated goodwill. The consideration transfer is 68 million, which is correct. NCI value, now the finance director used the NCI's book value, 70 million times 20%, which gives 40 million. Now we know that this is incorrect because NCI should be stay at fair value, all right, instead of the book value. Plus the fact that the net asset value shouldn't be only 70 million. Remember, the land appreciated by 5 million. So we can immediately conclude that the goodwill is not correctly stated. And what should be the answer? Now, let me show you. Now, I reproduce the question first. I show the consideration transfer and net asset. Now, when come to your answer, you do not need to show the question column. I show it here so that when you compare to answer, you can immediately identify the gap and the difference. So what has been missed? Of course, they missed the the contingent consideration, the CC, which in this case is 4 million. And at the same time, the NCI is not staged at fair value. It should be 70 million instead of 40 million. And the net asset has to increase by 5 million. So the total net asset should be 75 instead of 7. The red number are the area that you have to calculate yourself. And when we compare the answer and the question, we identify there are some differences. So the total goodwill should be 40 million instead of 12. Therefore, goodwill has to increase by 2 million. And at the same time, the land has to appreciate by 5 million. Therefore, we understand that we have to debit goodwill 2 million and debit land 5 million. We have to add back the CC, the liability, 4 million, and credit to the liability. And lastly, we have to increase the NCI by 3 million. So this is the total, the entry that you need to initiate in order to correct the error. So apart from calculating this table and the entry, you need to explain your answer. Students sometimes tell me that they don't know what to write in order to explain. Very simple. You just explain the red numbers, how you come up with the red numbers. So let's take a look. How you explain your answer? First of all, you may need to show that goodwill is calculated by the fair value of consideration minus the fair value of identifiable net assets acquired. Now, in this case, the fair value of consideration is 68 million, which is correctly stated in the question. How about the CC? Yeah, you can comment that apart from the share transfer, the consideration transfer also includes the CC, which should be stated at fair value. And the fair value is calculated by the present value, taking into account the probability of payment, 25%. So the fair value of the CC should be 4 million. You can go on comment a little bit about the CC. CC can be equity. All right. In case it is when the parent company committed to pay shares instead of money, the CC can be equity. Now, if it is equity, there's no remeasurement of the fair value in the subsequent periods. The reason is if the parent company to pay certain number of shares, no matter the share appreciate subsequently or depreciate to the company, it is the same amount of share that is going to issue. Therefore, there's no remeasurement requirement. But if the CC is the liability, then in that case, we need to remeasure the CC to fair value with the subsequent change reflected in the profit and loss account. For example, in this case, you accrue 4 million. If the subsidiary meet the target and at the end of the day, the parent company needs to pay 18 million. Therefore, the liability is not enough. We have to increase the liability from 4 million to 18 million, and then the difference, the 14 million, will be charged to the P&L. Okay? So, in this case, the group policy is to state NCI at fair value, and the NCI in this example has not been stated by the finance director. Therefore, we have to recalculate the fair value of NCI. So, as a conclusion, you can conclude that the finance director is not correct because he fails to take into account CC and he fails to correctly calculate the fair value of NCI. I wish my sharing can be helpful to you, and I will record future past paper reviews. So stay tuned with ACCA Hong Kong webpage. Thank you.